from here, from Lagos, Nigeria. I remain Abe Forex, and this morning I'm going to be explaining the strategies I use in trading the financial market. And like I used to tell my students that the financial market it differs. So we have several of them depending on which one you prefer. So try as much as possible to just choose one as a starter, as a beginner. As long as you are in the game, you can actually do what choose other instrument or asset that you wish to trade, as the case may be. So this morning I'm going to be explaining the strategy I use, which is I call it the fundamental strategies, or the foundational strategy as far as technical analysis is concerned. Do not forget that we have different we have technical analysis, we have fundamental analysis, and we also have what we call sentimental analysis. But we are not going to be going into fundamental and the sentimental analysis. We are just going to limit our horoscope to just the technical analysis. Now, in the last video I made us understand the fact that price, or let me just technically, the financial market, or let me just say, it respects what we call a trend. It respects what we call a trend, and that is when the market is trending. That is when we tend to make money in the financial market, and we don't have to, as a beginner, you don't have to trade when the market is ranging or consolidating, unless you know what you are doing. That's when you can trade that type of market. So now this is it. Now if you look at my screen right now, I have this trend line on CAD JPY. GBP JPY. So if you look at this closely, you notice that this price is moving in the direction of that trend line that I drew. Can you see that? So price usually respects trend line. So this is a monthly time frame, and as the case may be, I'm going to be teaching you what we call top-down analysis, whereby you are going to look at the direction of the market, where the market is heading to. Now, what does this mean? Since year 2020, if you look at it closest from this place, from year 2020, you find out that this market has been in a uptrend. GBP JPY here has been in a uptrend. Now, if you look at it, we've got almost more than 36 months, more than 10, close to like 48 months, and 12 months make 1 year. So 12 times 3, we have 36, and 12 times 4, we have 48. So I think in year 2024, 2025, we have as much as, let me just say, 60 candles here that represent what we call the monthly time frame. So 1 month actually represents one candle represents 1 month. So that means that a whole price action has been happening for a complete 1 month, and that means that for the longest, GBP JPY has been in an uptrend, and having created a resistance at this junction. Look at it now. Having created a resistance at this junction, you find out that the market reacted to this resistance, which happened in 2017, I guess. So it happened, I think it happened 2016. Can you see it? So it has to respect it. As soon as it got to this place, the first thing it did was that it broke that resistance, but it later came back, Now, how do I know this? Now, you have to look at prior information that has happened in the past. Now, you look at this zone has been a zone that has been viable for the longest. You notice that the price is reacting on this level. Can you see it? So this is the monthly time frame. Do not forget. So it has been reacting. Look at it. So as soon as it got to this resistance zone, the market was being pushed down back in 2016, and now from 2017, 2018, it started to move up to 2025. Can you see that? So that is what that. So we already know the direction of the market for GBP JPY has been in an uptrend. There's no doubt about that. Now, moving to the 4 hours time frame, as the case may be. Now, this is where you change your time frame so that you can know the direction of the market, as the case may be. Now, switching to 4 hours time frame, we need to know what the immediate trend is doing. Now, look at the trend line I drew on my monthly time frame. It has eventually broken that trend line, because of the resistance that we had. If you look at this very closely, you notice that this is the resistance I drew on one month time frame. This is the resistance which later came to support. This is also the resistance I drew. So the price got to the resistance and turned back. Now, this is my 4 hours time frame. This support is viable. It was after it broke the trend line. Can you see it? After it broke the trend line, it came back to this support. It was formerly a resistance. Let's switch to 1 more time so that I can understand what I'm saying. So we are trying to analyze the markets to know how to come in. Now look at this resistance. Now look at this where you get your square. I'm already added it to my favorite. Can you see? This is the resistance that actually rejected that price 2016, I guess, 2016. Then came back here, and from there started moving up from 2019 up to 2025. Can you see it? So this is the zone we're talking about. So look at the trend line I drew. So as soon as it got to this point when the price was rejected, this resistance zone, it was rejected and came back out and broke this trend line. Now I'm going to move back to my 4 hours so that you can understand what is going on in the market. So moving to my 4 hours, we want to know the directional bias of where the market is actually heading to. We want to know the directional bias. Now it broke. Now look at the first one. Look at the second one here. This is my first resistance that was broken, and look at the second resistance here. I'm going to see it now. Can you see the second resistance here that I drew in my 1 month time frame? Now, this is what the market is presently, and this, whenever a resistance is broken, it is meant to come back to retest. Whenever it's broken, it was a former resistance. As soon as it is broken, it will turn to a support. Now, this resistance previously has now turned to a support for this market to push back. Can you see that? But if the market was not able to, if this support, this resistance has turned to support, cannot be able to hold up to this market, it's going to hold up because it has happened in the past. This support zone, this resistance zone that has turned to support, has happened in the past for years, not months. You understand? So that is the reason why it's going to reject that place. You understand? Normally, if it's supposed to be in the lower time frame, like 1 minute or 2 minute time frame, there's a possibility of it just breaking like nothing happened because it's just 1 minute, 2 minutes. But imagine something that has happened for years. So that zone cannot be toyed with. So that's the reason why it's noticed that it was rejected immediately, because only one candle of just 1 4-hour candle cannot just break this support that has been existing for years. Imagine the activities that will have been taking place in just 1 year. Don't talk of 2 years, 3 years, 4 years, 5 years, 6 years, 7 years, and just 1 4-hour candle cannot break it. That's why it has to reject it. And that's the reason why you notice that it came back to this place. There's a possibility that it breaks this place and start moving to this second resistance. So we are still looking at what the market is going to do. So now that's my 4 hours time frame. Now let me now move further down to 1 hour to clarify things. Now coming to my 1 hour, don't forget that the resistance that I've drawn and the support that I've drawn and the trend line are still there and they are still existing, so you are still going to see them. So it's important that you take note of these things so that you can know. It's like tracking back what has happened in the past. Can you see that? Look at the 4 hours, look at the monthly time frame trend line I drew. Now look at what has happened in between. Do you get that? Now this is support, that this is the resistance that turns to support that I told you previously, that pushed the market back up. Now what they're expecting now is for those that want to trade this market, that this market gets to this place, and gives us a kind of reaction, and if it wants to break it, that means that we should be expecting it to get to somewhere here. Don't forget that as the trends progresses, you need to be drawing your support and resistance in every time frame. I'm supposed to do that, but I just want us to understand the direction of the market. Now you can notice that there has always been a turning point at this 1 hour time frame. As soon as it got to this place, it turned back. Got to this place, turn back. Got to this place, turn back. Now it goes to this trend line, turn back. Now we're expecting that it gets to somewhere here too, and begin to turn back. Let me just use this place first before we get to this place. So support and resistance is very, very important and very, very key, and trend line in the financial world. So some people use different strategies. There's no issue about that. You just know that the one you're going to be using is going to be making you a whole lot of money. So that is it. Now we have this drawn. Now let's now move to my 30 minutes. That is how to do top-down analysis. Now move to 30 minutes. And don't forget, these are the tools that you can use. They are by my left. Now this is my 30 minutes. So I've got, now if you want to measure how many, like using our ruler, you want to know the distance, because distance is measured in pips in the financial market. That's percentage interest points. So if you look at this from here to here now, it's almost like 398 pips, which is a whole lot. As a trader, daily you don't need more than 15 or 20 pips if you know what you are doing. Some people catch 100 pips, no problem about that. But at least as a beginner, just catch 15 or 20 pips is okay for the day. You are still going to make a whole lot of money. Pips is called percentage interest points. It's like calculating kilometer, calculating centimeter, calculating weights in mathematics or whatever things. But in Forex, you calculate distance in form of pips. So that is that. Now look at it now. So that's 392 pips movement. But though this market has been printed already. So if you want to make money from this type of market, patience is key. You cannot jump into this market because the trend is already going. The only thing I would just advise you to do is you have to be patient enough to wait till it gets to this place, this point, this resistance zone, and wait for a reaction. And as soon as you see a reaction, then wait for either a breakout to the upside or a reversal back to this support zone. How do you now get to know if the market is going to start reversing? When you go to your 15 minutes time frame, there's what we call structure in the financial world. Structure. So break of structure, which I think I've been able to explain that previously. I don't know if I've done that. So I think I've done that for some of my students, for those that understand the way I teach. So now break of structure. Now this is my 15 minutes time frame. So as soon as you get to this place, I'll be expecting a reaction from this place and a reversal. A level has been created here already. Can you see? So before I can say that the market wants to start to reverse, it has to break past this support zone, and I find out that it's moving to the other edge. Even in my my lower time frame, there's a way I can still draw my trend line, because trend is always your friend. You understand? I can do something like this, but for me I can actually still do something like this too. You understand? So that's how I use trend line. You understand? So anything that makes the trend line being broken, then that means we are ready for a reversal. Can you see that? But right now I don't need this. Let me delete it. And I don't need this too. So that is it. So this is it. Now I'll be waiting. Now we are in the 15 minutes time frame. I'll be waiting to let the price get to this place, get a reaction, then wait. Maybe I can now switch to 5 minutes to see if there's a change of character whereby this structure is being broken. I will not enter this trade until this structure is broken. Look how I'm talking about. Until this structure is broken, this structure. So as soon as the structure is broken, I know that I can target from this place down to this place, which is equivalent of how many pips? That's equivalent of 267 pips. In fact, I don't even need up to this 267 pips. At least if I can be able to see 50 pips out of this 267, I'm still going to make a good amount of money. So that is what that talks about. So I don't want this video to be long, so it's just a little bit of explanation of how to do your top-down analysis, and that is for GBP. The last analysis I did was on XAUSD, which was giving us, this is the monthly time frame, which was giving us uptrend. That means since 2019 up to 2025, gold has been in an uptrend. So that means this is a buy market. GBP is also a buy market. Can you see it is an uptrend for the past 5 or 8 years? Can you see that? So it's not magic, it's something, it's mastery. So once you understand what you're doing, I'm not sure there's going to be any problem. Then the same way I did for GBP, I do for XAUSD, move from one. Now this one is just a very straightforward thing. Now for me, what I do right here is that this is a resistance and this is a support which has been broken, right? So now I now draw my trend line. Okay. Can you see that? So, but necessarily, I don't think I need this now in my monthly time frame. I'm not sure I need this. So it's obvious that it's an option. So no need of drawing the trend line. And before anything can happen, we're talking about 1 month, so you will have seen the sign even in the lower time frames. So before anything can happen in 1 month, you have 30 days for you to be able to know that something is going to happen. So that's not an issue. So that is that. So I think from there you move to 4 hours. You could do weekly too. Okay, let me do weekly time frame. Let me go to my weekly time frame, which is still uptrend. So I don't just want this video to be longer than expected. So weekly time frame, you can see what I drew, the support and resistance I drew in my monthly time frame. I see. So it's very, very easy that we're still in the uptrend. So let's just move to 4 hours because of time. 4 hours time frame. So that is still telling me an uptrend. So what we're going to be doing is just mark the levels and enjoy your trend line where possible. You see that? So from there, you switch your 15 minutes the way I explained to you in the GBP. Then go to 15 minutes to pick your entry. If you have any other question, kindly share this post, like, comment, and subscribe. If you have any question, just drop it in the comment section. I'm going to answer the question. Alright, thank you.